All right, what's up, everybody? We are another month with Brian Hale. Brian and I, God, I mean, we are literally moving in on 2 years, Brian, of
Yep.
every month bringing some leadership takeaways to the industry. So if you're watching this and you are a mortgage executive, we're going to do our best to share what we think is most important as we middle of August, we're in the middle of Q3, how to close the year strong and how to prepare for next year. And then we're going to share takeaways that we've had from some events we've been at. He was just at Western Secondary. I was just at the AI Summit, and I did an executive roundtable yesterday. So Brian, what what's the signal right now for executives and loan officers?
Well, the signal that I heard at the conference, and it's so there's 900 people at the conference, and if I had to guess, maybe represented only about 150 mortgage bankers, the balance being vendors, right? So I think there's a signal right there, right? Where vendors are beginning to outnumber lenders at some of the industry conferences as this thing has got into its third year, right, of difficult times, difficult economic times. So people are reducing travel budgets, that kind of thing. And frankly, they do a great job. The resort's a fabulous resort. And then they had a golf tournament Monday morning, the first day. And so they didn't really get started until 4 o'clock on Monday and people showed up on Sunday, right? So there was a little boondoggle time in there. But there were like any conference, some of the best conversation is not on stage, right? It's more off. It's maybe in the bar, it's in the lobby, it's talking to people. And I think there was a general sense that people maybe feel like we're closer to the end of what the Irish call the bad times, the troubled times, right?
Right.
And maybe getting a little closer to the beginning of the better times, if not great times. I don't think they're great times anytime soon, but so there's that. But I think a little bit of that is it's been my experience that mortgage bankers and entrepreneurs in our space tend to be positive thinkers and hope for the best. And that's a good thing, but it's also a bad thing when people don't then adequately react within their business to make the moves they should or know they need to make, right? So there's some of that. I was part of an M&A panel hosted by Nick Pabarkis, who was the chairman of the conference, and had some great panelists on with me. Um, Dinner is very well attended, and even though I perceive that M&A has slowed in terms of the number of transactions, I also got a real sense that there's some large transactions still floating around out there, at least in the developmental stage, which I also think is emblematic of being towards the end of a cycle where large, well-capitalized companies are looking to gain scale, gain share, and prepare themselves for the future, whatever the future may be. Um, I think I don't think I know, there was a general recognition in some of the panels on some of the challenges of consolidation, both in the real estate space, the home building space, and in our space, in the mortgage banking space. And by consolidation, I don't mean M&A consolidation. I mean volume consolidation to the top 10%, right? And what are the implications of that? There was a lot of discussion around AI and the application, but to be blunt, I enjoyed being at the conference. I wish I could have been at the conference you were at because I think that's maybe a somewhat timely conversation. And there was a general sense on stage that the AI piece, and maybe it's just I thought it was a general sense because I believe this personally, that I think the industry is going to burn through a ton of capital investing in AI before they get it right. Right. I think there's going to be a lot of money and effort wasted because people are kind of racing in, and anything that has the letters AI on the PowerPoint presentation sounds good, right? And I think there's a lot of folks who haven't really thought through what and how do I deploy this new technology, and what does it really mean to our business? So I guess those are my brief things that I think people still find the business to be incredibly difficult. People who are making money are probably not fortunate to be making money, but they're clearly in the minority. Um, and people just see a lot of challenges.
Well, that's super interesting, and I definitely think that there's signal there. Now, I've got a different signal that came from the AI summit. I
I
actually just
suspect.
texted back and forth with Clayton as we were speaking because I want to make sure I portrayed the numbers right. But there were 531 people at the AI summit. It was standing room
I
only.
saw I saw some pictures. Somebody posted some pictures of the room.
Yeah, I mean we're talking. I want to say a little more on that in just a second. And one of the things I really admire and appreciate as a vendor that HousingWire doesn't let it get over two-thirds lenders, one-third vendor. And if it's getting out of whack, they raise the prices on the vendor. I mean, I paid a tremendous amount more to be there than a lender. And you know
Yeah.
what? I'm
It's
good
a
to go.
smart strategy. It's a smart
Yeah,
strategy.
yeah, smart strategy. So it was well attended, and then I had a number of meetings, like you always do. Like I go there for biz dev, meet with
Yep.
executives,
Same.
move my sales process forward. Almost every meeting I had scheduled, the person was like, "Hey, Dave, I'm sorry, but do you mind if we meet at the break?" Uh,
They didn't want to miss a session.
that never happens. That
Right.
never happens. So first of all, it was sold out. And by the way, I know it was sold out because I had multiple executives reach out to me, say, "Hey, Dave, anything you can do? I really decided last minute I want to go, but it's sold out." I know people that wanted to go and couldn't go. So AI is hot. I mean, to the point you made. And then the other thing that is super interesting, by the way, the stage was great,
Yeah,
excellent
it's a
information.
fabulous facility, both to present from and to be in the audience.
Yeah, yeah, no doubt. I would have loved to have heard more like data-driven stories. I just don't think we're there yet. So it is a reflection. Like I look at last year was the first inning of this AI race. This is the second inning. And to your point, the industry hasn't even come close to figuring it out. And I don't even think it will be figured out next year.
I
But
think I'd extend your metaphor a little bit. I think maybe we're still in spring training.
yeah, yeah, no, I agreed. I did a roundtable of about a dozen executives the day afterwards. Clayton attended it. Would have loved to have had you there, Brian. If you would have been there, I would have invited you. We had Jim Deitch, and then everybody else was lender executives. And I went around the room as everybody introduced themselves, and I'm like, you know, if you had one question you want to ask this room, what's that one question that you want to ask this room? And so you can always get like, what's the signal? It's a room full of executives, all peers. What's the one question you had? And multiple people had the question of where do we start? Like, hey, we heard all these things, we have all these ideas of what we can do, but like, where do we start? Any thoughts or comments on that?
Well, first of all, I think I would certainly validate that people are not sure where to start. And, look, I'm a consultant by trade now. And so I don't want to use the words pet peeve, but it's a thing I see over and over and over again in our space. I think it's true in a lot of businesses, to be honest, where people are technology first. Let's buy, let's do, let's go. We want to be AI. We want to be the cool kid on the block. We want to do those kinds of things without first asking themselves, what do you want the customer journey to be? Right. And the customer could either be the consumer or your referral source, a realtor, builder, whatever um, referral sources you may have, past customers, servicing customers, whatever. And without getting a really good handle, and I'm seeing this over and over again because I'm asking people, just tell me how you envision this enabling, taking friction off the customer, taking friction off your business partner, whether it lowers cost or not. Is it enhancing the journey of the consumer or the business partner? And do you know why? And do you know what the end-to-end journey you desire to have? From there, in my view, whether it's AI or just basic technology, then you acquire technology and you begin to plug it in as an enabler as opposed to an investment unto itself. Right? That's my view. It's always been my view. And by the way, that's really hard work, right? To get it documented, and to hold yourself accountable. So as you're spending this capital and you're spending these investment dollars, are you getting back not just the ROI, but I once heard Bill, and his name escapes me. He was the CEO at Rocket for a long time. Uh,
Emerson, Bill Emerson.
Bill Emerson made this comment in a meeting I was in a few years ago that at Rocket, they didn't always get too wound up about ROI on technology investments. If, in fact, it materially reduced friction for the consumer, made it easier for the consumer to do business with them, and made the journey, um, less distraught, for the new home buyer. And so I think there's a lot of spade work still to be done. And I think some people are going down that path and creating what might be revolutionary journeys. Whether they're right or wrong, I applaud them for looking at the journey first as opposed to let's buy this, let's do that, with a hodgepodge of AI related projects.
So, man, I mean, we may just spend the rest of this conversation on this. We'll see if we get into other topics. I do have a topic I want to close with, but this is a bit of a deja vu of our last call,
Yeah.
where, and by the way, I'm gonna put a link down below, guys. Brian and I talked about that. You had a similar reflection, and I think you're right. I mean, I think you were spot on. In fact, I had a couple conversations with mortgage executives, and I was asking them where they are starting, and they all, the way they answered that question, it was all about workflow. And and the interesting thing is it was about workflow, and it was about the LOS that they have, it was about the legacy technology they have, it was
All
around
right.
manufacturing compliant saleable loans.
Data,
And
reporting,
yeah, well, here's the deal, guys. Yes, you need to have a workflow that manufactures quickly and effectively, consistently, profitable, compliant, saleable loans. Like that's table stakes. But everybody is so obsessed with that and so focused on that that they're not, like, we live now in a society where people are using Chat GPT on their mobile phones. They're
yeah,
using
look,
AI.
chat and perplexity has replaced Google Chrome for me exclusively.
Yeah, and then they're scrolling on Instagram and social media, like it's mobile, and you look at what Rocket's doing. I'm not going to unpack the whole report, most recent report, but guys, they're off to the races. Like they're not even a quarter into acquiring Redfin, and it's beautifully branded. They're pulling in, I think, 200,000. Um, like it was a mind-boggling number of apps, loans, like the whole thing's working, and they're working on customer experience. So, Brian, just to remind, and let's skunk work this. We came up with a new framework where it starts with customer experience, where you rate on a scale of 1 to 5, uh, 5 being the most impacted customer experience. So look at all the things that you have and all the things that you could do, rate that on a scale of 1 to 5. And then I think we said, now let's rate everything on a work experience scale of 1 to 5. And then let's actually have two categories for ROI. One category on a scale of 1 to 5, your ability to measure it, because there's a lot of things that you just can't really measure your ROI on. And then scale of 1 to 5, 5 being we think this is going to have the most impact on ROI. Like if you did those three things or those four things, customer experience first, work experience second, ability to measure and actual measure, and then you decided, now where should we start? What are your thoughts on that?
First of all, I agree totally with your framework. And then second to that, I had this conversation with a client this morning. Um, you just rolled out a number of AI enabled tools at Mortgage Coach, right? And
We
trust me,
did.
let me just ask, and I don't know the answer to this, but I'm going to presume because I've gotten to know you pretty well. How involved were you in the development of and deployment of those tools to tweak and get it right? Did
Oh
you
my
did
God.
you
Well,
do
first of
did you just
all,
do one of those? I delegated all. I hired good people.
no,
Call me
no,
when
no.
you're done.
I made sure, first of all, our head of product, Mike Spotten, did an incredible job of interviewing our alpha testers. and I listened to the
Right.
recordings
Right.
um, of
Yeah.
about a third of them, and then I used AI to audit the rest of them,
Right.
and then I personally made a number of calls
Here's
because
my point. This is non-delegatable work. Doesn't mean you're in coding. It doesn't mean you're in doing this or that, or you have to be an AI expert. But the overseeing of the process and providing input, feedback, and engagement and leading your organization to understand it is your priority. Not that it's delegated to somebody so that A, if it blows up, it's not your fault, or B, you've got other things that are interesting to you. And so I think execution has to really be, maybe one of those things you rate on how you think through this process is really critical around the success or lack thereof in any technology project. And I think it's going to be even more so in AI.
Yeah, agreed. Yeah, and by the way, that was one thing I wanted to make sure I shared today, because we are now on week 3 of launching our Mortgage Coach AI enabled experience, and we have over 4,000 loan officers using it right now weekly. So, 4,000 are actually using it weekly.
Right.
Uh, and then we are averaging 1,800 consumers putting in prompts, like asking it questions uh,
Hmm.
every week. And we're just getting started. And so that's one thing I want to push the industry. And by the way, if you're listening to this, I'm looking for data stories. I want to hear like, hey, we rolled out AI. Here is the data. And then why do you think that data is, one, creating value for the borrower, and two, creating value for your loan officers in your organization? Like I want to hear data, and then I want to hear like, okay, what does that mean to the consumer? So I'm actually looking for stories. So if anybody has one, text me, comment down below. I want to interview people around data stories. So, guys, I just mentioned that we have over 4,000 loan officers using Mortgage Coach AI every week, having over 1,800 borrowers run prompts. So, to make sure you know what that means. And what that means is we have built in an AI prompt into the Mortgage Coach total cost analysis so that now not only can the loan officer deliver options and strategies to get people super excited about buying a home, the consumer can interact with this. I mean, talk about the consumer experience. This is the consumer experience of the future. They could ask questions like, what's the lowest cash to close option? And while the loan officer or while the consumer is interacting with the total cost analysis, the loan officer is getting a transcript of this. I could be asking questions. In month 23, what will my equity be on option two? Whatever is going through their minds, they can ask those questions. Uh, if I'm going to live in the home for 5 years, what would be the best option? Whatever they think, they ask, and they get immediate feedback. This is the future of lending. Let's get back to Brian. But if you don't have Mortgage Coach built into your tech stack, it's never been more important. Go to trustengine.com, sign up for a demo, or shoot me an email at dave@trustengine.com. Anyways, back to the interview with the conversation with Brian. By the way, what do you think of that data? Just top of mind, that 4,000 loan officers in the first 3 weeks
Well,
pounded.
first of all, I applaud you to get any kind of execution and adoption. As you know, I think particularly in your business, it used to frustrate me as a CEO or a production head to have acquired technology that I know would help my folks and not get adoption, right? It's like the greatest waste in the world, right, through the process.
Yeah.
And so I applaud you on that kind of data, getting it. And hopefully you'll likely be able to get metadata just off your users as well in terms of how they're deploying and kind of productivity they're seeing and what kind of returns they're seeing individually, right?
Yeah, no, definitely. So okay, one thing for anyone listening, I'm actually, after Brian and I talked about it, and this is the second time where we came up with like a framework. And then I wish I would have thought about it when people were saying, where do we start? I actually didn't think to share the framework you and I created with. I wasn't that Johnny on the spot, but I'm gonna document that because I really do think like, hey, this is where you start. Like, create a document, do a matrix, score everything that you could do, and then align on, we're gonna do this, and then we're gonna do that. And highly recommend getting Mortgage Coach AI enabled so that your pre-approvals, and the way you quote rates and the way
Right,
you deliver price to the consumer, you've AI'd that. You've made
right.
that like modern. Um, Brian, any other takeaways from secondary? Any like new products coming out?
No,
Any
look, I think there were a lot of vendors there hawking products, from home equity to seconds to a variety of the non-QM pieces. I don't really think, we're not an industry that is dominated by the kind of the new product guys. Here's one takeaway, and I don't know if you saw this or heard it at the AI summit or not, but um, one of my favorite sayings is if you're going to put somebody in charge of the new ideas department, I don't think it's a 20-year veteran of your company or a 15-year veteran of your company or a 10-year veteran of your company. Because by then, that person, as smart as they may be, as capable as they may be, have absorbed the inertia of your company. We do things here a certain way, right? We have a certain protocol. And I had an old mentor who used to say that new blood is the lifeblood of the mortgage business, where people come in and question you, even if they're annoying. They come in and question, why do we do it this way? Why do we do that? How do we do that? Why do we do that? That's exactly the person who needs to be in the room and or the leader of the new ideas department. To be blunt, I think is often better served to be from outside the company where they don't have vested interest in either something they had already built previously. You talked about workflow. When's the last time you had a customer call you up, Dave, and said, Dave, could you explain your internal workflows to me before they, bought your product, right?
or
Nobody,
your perfect loan
right,
process?
exactly, right? Nobody cares, right? First, they don't know what the hell that means, right? You know, I'm approvable. I think I have a constitutional right to a mortgage. Come on, what else do you need to know from me, right?
Right, right.
And so, I think we get trapped sometimes in our own buzzwords, but I see it all the time. Companies get trapped in doing it their way, and I've led a lot of change in my career, and the number of times that I've heard companies that I've joined where for 2 years, and even when I was the boss, people say, "Well, we don't do it that way here." Yes, I know. I know. I know, right? That's why we're changing, right? In that process. And so I do think another mistake I see in all technology projects is people tend to select SMEs, subject matter experts, by who is the least important person in my department that I can afford to give to the project, as opposed to who's the killer, who really knows what they're talking about and is a good thinker and assesses and will stand up to groupthink and do those kinds of things and put that person on the project team is also a key, both failure and where things work well. You get the right SMEs on the project who can think differently, led by somebody who can both give direction and listen and be challenged about what they're doing, and enough people in the room to stand up and challenge whatever the group thinks in an effort to find the right answer. To me, the worst tragedy, I always used to feel this occasionally from technology or marketing or those departments, somebody would do a month's worth of work, bring it to me, and I'd throw up on it. What a terrible feeling. It's a waste of a month's work on a project team. Two, I hated doing it. Three, I was frustrated. And so iterative involvement by the senior leaders in the company, I think, is an absolute requirement as well. So that you check in and check in and check in so that the course correction might only be 2 degrees to the left, as opposed to, holy God, somebody took a hard right turn somewhere and I need to reverse the whole thing and go the other way.
Yeah, the thing that came to my mind when you were talking just now was leadership by example. So where do you start for anyone listening to this? Whether you're the CEO, and by the way, and you know it, we get CEOs that listen to this. We have heads of production, because Brian Hale is a legend, and a lot of them worked for Brian or they work for someone that worked for Brian. But leadership by example, and that means how are you leveraging AI? Brian and I just talked, like sounds like Brian's using Perplexity instead of Google. By the way, did you see that little headline recently where Perplexity made a bid to buy Chrome from
I
Google?
couldn't decide. I couldn't decide whether that was a shot across Chrome's bow,
Yeah,
right?
is that just a
Just
PR move
just
or was
just
that real?
because we can, right? Yeah, that's
Well, I
game.
didn't know if it was clickbait. Like when I saw it, I'm
Yeah,
like,
yeah.
is this like clickbait or is
It
this
looked a
real
lot like
news?
David taking on Goliath, to me anyway.
Yeah, it was pretty cool. But yeah, so we're using Perplexity for search. I'm using Chat GPT and then Whoosy, which is a
Yeah,
platform that's really designed for the mortgage and real estate space. Oh, real interesting. So I mean, there were a lot of good presentations from stage, but the CEO of Rocket, or excuse me, CTO of Rocket, by the way, phenomenal communicator.
I've seen him.
I highly recommend for anyone that missed it when that comes out from HousingWire. That is not to be missed. Also, the CTO from UWM slayed it. He made a really big case that we should all have the $200 a month version of ChatGPT. So I have the $20 a month version of both Perplexity and Chat, and then I also subscribe to. But he really made a case, like was almost like he was selling ChatGPT. Like you need the $200 a month version, and he kind of walked through some use cases. I'm actually thinking about taking him up on it.
Yeah,
Which one what do you use?
I
What's your,
run off the 20, and I have same with Perplexity. I also have Claude. And I think I shared this with you once before. Maria Elena and Maria, I shouldn't say I because I don't do it. Maria Elena does it. She uses Opus on our video editing.
yeah, we use Opus
Right,
for video editing, and then we also use Descript.
right,
Uh, by the way, guys, anybody who's creating content with video, Descript is amazing because it's like a word processor. It like transcribes the video, and then you take out the ums and ahs, just like you're,
right,
using Word. It's amazing.
right.
All right. Well, Brian, what
Well,
else?
look, one thing just to validate all of this conversation, David, the other thing that did come out, obviously, is everybody's still struggling with their P&L. Not everybody, but most. And, the promise of AI, and I worry about this a little bit when the whole industry moved to offshoring, to cheaper labor. And I shouldn't say the whole industry, much of the industry, especially the big guys. Um, a mistake that was often made was they would offshore a function and then not get rid of the headcount.
Right. Oh,
All you did is worsen your cost, right? So I think it's an analog for technology investment as well. If you invest in that, then you go, well, we'll just find other jobs for these people. You kind of miss the point.
well, by the way, that was a really big topic at the roundtable. So we had Chad Smith, the
No, Chad.
president of Better, in the room, and his metrics were better. I think. Well, I'm not gonna. We had a room where everybody was very transparent, but I'm not going to say what his numbers are just because he's
Right.
in the room. But let's just say his 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 metrics were better in terms of the number of decisions that his underwriters are making per day. And it was a combination of offshoring, AI, and just relentless focus on being better
Can,
with,
can I add to your framework just a little bit on that topic?
yeah,
You also need what I call a risk adjusted metric, meaning you could have two or three times the decisions per day per underwriter because of your investment. Now, talk to me a little bit about your credit quality, your manufacturing quality, your repurchase scores, your the amount that you're having to carry for loan loss reserve. Because you can do a lot of fast decisions, doesn't mean they're right, right? And so I think people have to find those balances there's a term in particularly in consulting called RAROC, right, which is risk adjusted return on capital. And you can get a 40% return on capital, but if you're taking a bunch of illegal risk to do it, probably not smart, right? Long term. And so in our business, it's credit risk adjusted returns, it's repurchase risk adjusted returns. And so I'm always trying to quantify when I hear these numbers occasionally, and I'm not saying this about Chad. I know Chad and I think he's a great guy. Um, to your point, data will begin to tell this story over time, including those kind of metrics.
It's true. It's true. By the way, he shared a number of those, and not that I want to advocate for better. They're a great client of ours. They have built Mortgage Coach into their tech stack, and they build technology, and when it makes sense, they buy technology.
Yep.
But it was just great. We had leaders from some of the biggest servicers in the country in the room. We had some of the biggest consumer direct, some of the big distributed retails. It was just a really good mix, and that was a topic. How do we balance this? And the word AI revolution was used over and over, and not in a sensational way. Like like this is happening, and how do we optimize it? But then also, how do we transition people? How do we grow people? Um, there's going to have to be a shrinkage of people in certain roles. Um, so, anyways, it's going to be an interesting
Look, I think you're going to have
couple
to,
of years.
I've had the opportunity to utilize outsourcing, offshoring through the years at some pretty big scale. And one of the challenges you had then, and I think it'll be the same with AI, maybe even more pronounced, is overcoming what I call the political aspect of the decision. You
Right.
know, people start fighting on, why would you eliminate these jobs? People need those jobs, right? And the answer, of course, is you're pruning the tree for the success and the long-term viability of the tree. Because if everybody around you has pruned their trees and you don't prune yours, yours falls down.
Yeah.
Bad things happen to good companies that don't make money.
Agreed. And I've got a closing thought, but before I do my closing thought on just how fast AI is coming and just what is happening, what are some of your closing thoughts today?
Well, you've heard, I think I've told you this metaphor in the past, but I've when I've raised capital on Wall Street or talked to private equity firms or people that are thinking about getting in the mortgage business, they always ask me about technology in the business. And I say, look, I've been doing this my 44th year. Um, I think for the most part, technology in the mortgage business has been signified by we had a wagon, we had a horse. The wagon went a certain speed. Most of the technology evolution in the business has been a slightly faster horse, still hooked to the same wagon. I believe that AI is the first real technology I've seen in my 44 years that has the chance to completely change the game, where you shoot the horse, strap two jet engines to the wagon, and take flight. And I think people need to be giddy up around learning and understanding both the cost and the benefit of it and where and how to deploy it. But I'll just come back and look, and I'll make a little personal self plug. It's a little bit of what we do here at Mortgage Advisory Partners is to help people think through some of those kinds of things, right? You touched on workflow, the customer journey, those kinds of things, voice of the customer, and being that voice. And I'd love to be in one of your roundtables someday. I'd be glad to come along and be the guy that sprays gas all over the conference table and sets it on fire, and let you circle from there. Um, I think thought is often an unused commodity in our business because it's really hard to think differently, to try to get outside your own space, whatever you as a senior executive have helped build in the company you lead or run, and being thoughtful about what you're trying to accomplish, creating those metrics to measure yourself along the way, iterative check-ins, iterative development, iterative course correction takes an immense amount of effort and time. It can be the greatest 18-month deployment of your career, or it can be an unmitigated disaster, which is how sometimes new CEOs are created, meaning the old CEO goes away because they picked the wrong path, right?
Yeah, love that. So guys, here's my closing thought. I first saw this stat. Ron Stowers added on LinkedIn. Thank you, Ron. And he was quoting singular. University. And by the way, I'm going to share this stat with you guys. Write this down. I have also verified this with Steve Brown, futurist, who used to be the chief futurist for Intel. Most recently, he was with DeepMind with Google. So he was on that team for over a year. And he verified, he's like, I'll tell you what he said, but here's the stat, guys. The AI power to cost ratio is doubling every 3.3 months.
Yeah.
So think about that.
Right.
Like, imagine what you can do with AI right now. Imagine what AI voice is doing right now. In the annual report that Rocket just came out with, they are doing fully automated autonomous mortgages and they are using AI voice at scale. And AI voice at scale is outperforming humans with, I mean, we're talking very basic uh, warm transfers. Um, but remember, it's doubling every 3.3 year months. So what does that mean over the course of a year? That's 16x. So over the course
Yeah.
of 12 months,
Right.
that's 16x. And what does that mean?
That's a 2x faster jet engine every 3.5 months,
Yeah,
right? On a
and
plane.
then 2 years from now, what does that mean? That's 256x. And then flash forward 5 years from now, that's millions of times more powerful. Now, with that said, again, credible, it's scaling fast. Steve Brown said, based on, because I asked him, I'm like, is this for real? And he said, based on recent history, this sounds accurate through past observations. He said, however, don't imply future certainty. We could hit a wall. Scaling is diminishing returns, but the trend is right for the next 2 to 3 years.
Yeah.
So guys,
Dave, can I just add a piece to this real quick and I'll let you close on that? If you're running a company and you're investing in this, let me just give you a thought you should be asking yourself. And I don't say this to spook all the CTOs or IT folks out there. You have to ask yourself, do you believe your team can keep up with that speed of evolution?
ooh.
There's a question.
Well, by the way, your team, do you have the right seat on the bus and do you have the people in the right seats?
That's right.
And I do think there, the word AI czar was mentioned from stage. Uh, the idea of having, like, we've got chief revenue officers, we've got chief strategy officers. Do we need a chief AI officer, or do we just need to make sure that the C-suite, my take is that the C-suite is owning
Yes,
AI excellence and you are leading by example, and then you're
exactly.
you're literally integrating it into everything that you do.
Dave, I never had a chief risk officer. And I used to have the warehouse guys and the GSEs and others question me on that. I said, guys, I'm not gonna inoculate my senior team from their personal responsibility to manage risk across the franchise by hanging risk around Dave's throat, right? As my chief risk officer. That to me allows people to delegate to the side or up. In the well, that's Dave's job, or that's Bob's job over here. That's not my job. No, no, no. Risk is everybody's job. I think as this thing goes forward, I think you just nailed it. The entire C-suite, the entire leadership team has to own this. Maybe at differing levels, maybe at different involvement levels. They're going to have different skill sets, but I would say this. Whoever your orchestra leader is on this topic, you have to ask yourself, I'll extend your metaphor or the metaphor I put on. If you have a pilot who's flying a jet and every 3 months the engines are twice as fast, and you get the multiplier effect that you just talked about, Dave, over the first year, two or three, is that pilot capable of piloting that plane? Yes or no? And if the answer is no, very high chance that everybody ends up on the plane dead.
Yeah,
So
no,
you've got to
really.
think about talent acquisition and evolution into those roles, and you got to be thinking two or three or four clicks out in terms of, does your talent meet the curve that's coming sufficiently far enough out on the curve that they can get you there?
Well, and I'm going to add on,
That's an ugly thought, by the way.
yeah, when you think of your sales force and you think of loan officers, do you have not loan officers, but modern mortgage advisors that are
Yeah,
data enabled,
right.
AI enabled, and
Can they
are you
can they
resourcing
adopt? Can
the
they adopt what you're
transformation?
building? Right.
Yeah, are you resourcing the transformation? By the way, make sure they're following this YouTube channel. Make sure they're following Brian, making sure that you guys are following the platform, the weekly roadmap that Brian has. I'll have you close on that in a minute. But it is a transformational time in the mortgage industry. I'm actually going to start a new social media account called the Uncommon Loan Officer, where we're gonna just do little micro clips of loan officers where they had their transformation. And like, by the way, here's the thing, guys, anybody can do it. It doesn't matter how many loans you close, it doesn't matter what age you are, it doesn't matter what your past story is. It matters what you're doing today. Are you going to use AI? Are you going to use data? Are you going to give customers an actual customer experience, or are you going to give them a rate quote and give them a loan transaction? So, closing thought, Brian.
Yeah. Look, to your point about anybody can do it. Most people on this call, because they follow you, or maybe they saw him on the weekly roadmap. Most people in the industry know who Shant Bonosian is, right? Great guy, top originator, billion-dollar player. Just remember, the day Shant Bonosian started in the mortgage business, somebody else was number one in the industry,
Yeah, you're right.
right? And probably a number of people were number one before he became number one. And so his first day, his first app, he wasn't Shant Bonosian. He was just the new kid on the block, working in a call center, doing, hard money loans. Where he's evolved is because he evolved himself and invested time and effort and thought in himself and his team. He displaced. Anybody can do it.
Yeah. Well, beautiful thought, Brian. This has been an awesome conversation. So, first of all, make sure you're following our YouTube channel. I'm going to be doing more of these half-day executive roundtables. This is the second one I've done this year where when I'm traveling to events, staying an extra day, getting a room. They're not going to be big rooms. They're going to be, 10, no more than 20 executives. If you want to be on that list of executives that I invite, just shoot me an email, Dave at Trust Engine. Brian, you will always be on the list. I knew you weren't at the AI Summit
Yeah, I
because I,
know. Yeah.
I had
We had
the
chatted
app
about it.
and I knew who was there. So you were not invited. But let me know if you want to be on that list of executives. Um, and Brian, this has been a really good one. I mean, I think all of the calls you and I have done together have been I'm really proud of, but I feel like this one just had a little more juice in it, man.
Well, we're both fresh off a conference. So again, Dave, as always, I appreciate doing this. I appreciate you bringing me along on these and look forward to the next one.
All right. All right, guys. Hope you got value. This is a wrap. If you have questions for Brian and I, put them in comments down below. If you got value, give it a like, share this. If you're a loan officer, share it with your leadership team. If you're on a leader, on a team, send it to your team and send it to your loan officers. Take care, everybody.
Take care.